More numbers that are due today, and from the auto pack, it's Hero Moto, where we're awaiting the Q1 earnings. Sonia is here to take us through the key expectations there. Sonia.
Well, thanks a lot for that. No prizes for guessing this one. Expected to be weak numbers this time around because of the overall sentiment dampening that we've seen in the auto sector. Now, Hero MotoCorp is at a 52-week low. The stock is down 25% in 2019. And it is trading at a discount to its historic valuation, so trading at about 13 times forward earnings. This time around, the revenues are expected to fall by 7%. Q1 was a very weak quarter, so the volumes in Q1 fell 12.5% year on year. The margins in the last quarter, Q4, were down for the fourth consecutive quarter because of pressures, higher discounting, higher raw material costs, etc. And all of that will continue to put pressure this quarter as well. The only saving grace is that the realizations have gone up a tad bit. That is because of the new anti-braking systems or the ABS norms, because of which higher costs have had to be passed on to the consumer. So on account of the price hikes, the realizations will rise about 5% year on year. Otherwise, numbers will be on the weaker side. More importantly, we need to know what the management commentary is. Last time it was quite cautious. They said that Q1 would be weak and the recovery would come through Q2 and Q3 onwards. Let's see whether they scale down, their estimates this time as well. Also on their cost optimization plan, they had a cost-cutting plan which has been in the works for the last 2 years, because of which they've been able to hold on to their margins at around these 14-15% level. If those cost benefits are over, then perhaps there could be further pressure on margins in the second half of the year. Back to you.
Sonia, thanks very much for that. But Reema, what about Tech Mahindra, another number that's due this evening?
Yes, so numbers should be out closer to about 4 o'clock, so post-market hours. We aren't expecting a great quarter because Q1 is traditionally weak for the telecom business. So that's why the revenues will be down on a sequential basis, both in dollar terms as well as on a constant currency terms. As we've seen with the rest of the IT pack, pressure on account of the wage hikes, visa costs, the INR appreciation will result in margin compression. So according to our poll, margin should be down by more than 200 basis points. The EBITDA is seen at 13.2%, and this margin compression will put pressure on the profitability. So profits could be down close to about 15%. Their FY20 guidance stands at mid-single-digit kind of growth in the communications vertical, and the enterprise business, the non-telecom business, will have an 8 to 10% growth. Here, the company told us the last time around that the skew could now be more in favor of communications, which means that communication or the telecom vertical may do better than what they had earlier anticipated, while the non-telecom business may be a tad bit weaker than earlier anticipation. But net-net, the numbers should be in line with what they had expected. The key to track then will be the deal wins in both these two segments. If there is any 5G revenue which is flowing in for communication, the company's worked a lot on improving their margins, but a lot of people believe that maybe the low-hanging fruit of margin improvement is behind us. So how does the company recover from the Q1 drop in margins, especially with the INR appreciation and the attrition, which is at a very high rate?
Okay, so that's something to watch out for. Meanwhile, VIP has reported numbers and the stock is surging. It's up 8% now. But Mangalam, the numbers don't look good. So what's behind this big up move?
Looks like perhaps, the fact that the street knew that the numbers are not going to be good, which is why the stock is higher and therefore in line. And the other thing is that if you pull up a longer term chart of VIP, you'll know that, the stock has corrected from levels upwards of 640. So it's corrected a good 40% from its 52-week high. There you have it. In the last 1 year, it's fallen. In the last 12 months, it's fallen about 17% odd. So maybe a bit of numbers being priced in. But just to take a look at the numbers, the revenue growth at 9% is muted. The street was working with a number upwards of 10%, at least 15 to 16%. So 9% revenue growth is the lowest that we've seen in the last 8 quarters, perhaps reflecting the sort of slowdown that we've seen in air passenger traffic as well. In the last quarter, the air passenger traffic grew just about 1.5%. The reported EBITDA was higher because of the Ind AS impact. So the Ind AS EBITDA came in at around 116 odd crores. This compares with 91 crores. So there's a big bump up that we've seen out there. And the net profit has a lot of adjustments. So the net profit is impacted by that exceptional loss of 48 crores. So let's take a look at the gross margins. The EBITDA margins, the reported EBITDA margins are higher, but the gross margins are lower. So that's telling you that most of the EBITDA margins gain have come in on account of the Ind AS 116 impact, which is reflective in the company's depreciation, which has jumped from 3 crores to around 18 crores, and also the finance cost, which has jumped from 0.2 crores to about 5 crores. So a lot of the margin margin jump has come in on account of the impact. If in fact, if you adjust for all of those things, and the company has given the adjustments at the bottom of that the result press release, the adjusted EBITDA, wait for it, is lower by 45%. The adjusted EBITDA is at 50.4 crores. This compares with 91.7 crores. So the adjusted margins also are now in single digits. That number should come up for you. The adjusted margins at around 9% as against 17.7%. So the results are weak, but let's see how it comes along going forward. Is the worst priced in or not? Because like I said, from its 52-week high, the stock is lower by about 40%.
Stay on, Mangalam, because we need to talk about the big story of the day, and that is VG Siddhartha, the CCD founder, has gone missing. In a letter to the CCD board dated 27th of July, VG Siddhartha said, and I quote a part of it here, "I would like to say I gave it my all. I am very sorry to let down all the people that put their trust in me. I fought for a long time, but today I gave up as I could not take any more pressure from one of the private equity partners forcing me to buy back shares, a transaction I had partially completed 6 months ago by borrowing a large sum of money from a friend. Tremendous pressure from other lenders lead me to succumbing to the situation." So that is the end of quote. Of course, the letter goes on to even later on state the assets and liabilities. But Mangalam is here. You've done some analysis. Is there any impact on the pledged shares, the IT department? What are they holding currently?
Well, the IT department, Rima, currently is holding shares of Coffee Day Global. Remember, just before the Mindtree stake sale was announced, or the stake deal was announced,
that's the unlisted entity.
There's the unlisted entity. So if you take a look at, on Feb 14th, 2019, the IT department had some stake which it had of Mindtree, which belonged to VG Siddhartha and Coffee Day Global. They had around 75 odd lakh shares, which they released. But in lieu of releasing that, the release was done basically to pave the way for the stake sale in Mindtree itself. In lieu of that, they went ahead and to protect its revenue interest, the ED attached around 2.5 crore shares of Coffee Day Global to safeguard their revenue and in respect of future likely tax and penalty obligations was how the release read. So there still is 2.5 crore shares of Coffee Day Global, the listed entity, which are with the ED. They have attached that. The other thing that really stood out was it turns out maybe a large part of the liabilities may be personal in nature and not specifically company related, because if you take a look at Coffee Day's net total debt as of March 19th, it stood at around 4,200 crore if you remove the sort of cash that the company held in its books as well. And then come May 3rd, the Mindtree deal was consummated. The company went ahead and informed the exchanges that they are looking to repay about 2,100 crore worth debt from the 4,200 crore worth debt that they had as of March 19th. The net proceeds, net of expenses and taxes that they received were around 2,100 crore. The proceeds that they received after selling the stake in Mindtree, and that was used to repay the debt. So if you just do one and one together, looks like the debt could be around that 2,100 crore mark. Not too bad as far as the pressure on the company is concerned. But the final thing is that most of the promoters' stake, 75.7% of the promoters' stake and 70.7% of VG Siddhartha's own holding of 32.75% was pledged. So that's telling you that perhaps it was more personal in nature than company related.
Absolutely. Thank you very much for putting that in perspective. Well-spun numbers also on your screen, but we've run out of time on Midcap Radar. Our special mutual fund corner will answer all your mutual fund related queries on the other side. Stay tuned.